All right, folks. We're on the inside here. All right, so Trust Carnival was good for everybody. All right, good, bad, ugly, boring, all different things. The time was hard by some. All right, I'm going to steady roll and see what we're going to do, right? So I see in Anissa here, Aya's online, Jaziri here, Jordan here. Yeah, tell you what vibes you hear. What's going on? You hear me? You know, hear me? You asked a question. Did I not see the question? Oh, right. Oh, who that? Hey, let me test. Okay. Cassie here, Kelsey here. I'm seeing Liam, Logan, Mandeep, Marcus. Hey, Matthias, good afternoon. How you doing? Good to see you on. Crash course is in. I had to study dates, but it had to be in April. Yeah, I'm cool. I'm cool. One second. Let's answer the parent here. That's great. Saturday is good. Friday would have been better. Okay. Sorry. Back to taking roll. Right. Not seeing Noah, not Nyla, Olivia. No. Paige is here. Not seeing Chikwaya. Not seeing Shimon. Shiraz, which is the replay. Is Tilly. Say Teresa to come on Wednesday. Where Tino today? Not here today. And Yuri. Right. So Yuri might bump in later. Right. Yeah. Right. So Talia was asking about the crash course. Yeah. So people have been setting up since January for that. And Yuri has brought on like 3 or 4 people. So we're gonna see how that's going because the dates this year are running a little tight because right. So folks, as you all know, we in March, sorry. I taking a thief in too much from all their hand, but are out of pocket. Yeah, boy, things bad in the camp. My apologies. Right. All right. So let me just get a little context for what we're gonna do. Right, June 2025 final. Okay. Right. So today's the 5th of March. So the 5th of May is English A and the 6th is PoA. So as of tomorrow is 2 months till, right? We also know the term ends on April 11th, right? And we have 2 weeks Easter vacation, and then you're back out again here. And then that 1 week, when that 1 week done, you're in exams the following Monday and Tuesday. Yeah, so I have a strong feeling that quote-unquote crash course will probably start either the 7th or the 14th, somewhere between there. But again, y'all will probably have had access to all that stuff before, but if you want to be a part of it, it's not a problem. Yeah, okay. Well, that's and of course, Mass is the Friday, so we have 1, 2, 3 clear afternoons. Yeah, Tuesday, Friday, Tuesday, Wednesday, and Thursday to think for maths. For that PoA, well, we could be jamming from the week before, right? So from the week before, you're all back out at school, right? Yeah, you're back out at school on the 28th and then the 6th there. Yeah, so hold on, here's Yuri. Yuri, what are you bumping? Hey, Yuri, good afternoon. How you doing? Good to have you. I was just checking out some dates for the crash course there. Thanks for the recommendation. I'll save your friend to the list. Yeah, so I had to set my dates and stuff and promote some stuff by next week or 2. Yeah, but you know, about 8 or I have 10 videos backing up to edit the Jan and May 2024. I still have Jan 2025 solutions to do and then do videos on. So it's just time, boy. I'm not getting time to do that. I might have to hire an editor, but they're expensive. Anyhow, yeah, folks. So we basically 2 months out there. So March has how many days? 31 days. Okay, cool. So today's already the 5th, right? So then okay. So 25, so 26 days, right? Plus 30, 26, right? That's what 56. 56 and 5 is 61. Right. So we have a little less than 9 weeks, I guess you'll say. Yeah. Is it 9? Yeah. Okay. 9 is 63 days, and we have 61. Okay. Yeah. So we final approach there, guys. So yeah, we gotta pick up the pace of this. All right. So folks, I kind of want to wrap up balance sheets and stuff because we spent a little too long on it. But of course, I want to make sure we understand what we're doing. Right. I don't want to move on from stuff until we understand. Although sometimes it becomes necessary to do so. All right. So last week we took a look at the working capital format. Or at least we reviewed it because we said it was the least intuitive way to do a balance sheet because it kind of threw things all over the place. There wasn't really a consistent presentation per se in the current assets. Well, the sections, right? This is the question across here. Then we did some more stuff in the current assets, right? We also did some extra current liabilities. And now we want to talk about depreciation in the non-current assets section of the balance sheet. 1 sec. Oh, okay. Sorry, let me just answer Logan here. Okay, yeah. Right. So let's get a NC. Okay, so we're talking about non-current assets and depreciation. What are we looking at? Oh yeah, anybody else on Google Meet? If you guys got your mock timetable, feel free to send it to me so I know what kind of time frame we were working with, right? Okay, so we'll excuse me for that. 21st. Okay, cool. Okay, so we have a couple weeks again. Okay, so we can finish some more stuff, right? I spoke to Mishka and she said she could take you all and do that stuff, the CF and other stuff, right? I just had to kind of rearrange that side. So, because she said she want to work with you all and 2 of the other kids on this side, right? So, I don't know if that will happen from today per se. She said she probably will be here, right? But we could see what we're going to. Right? Okay. Oh, let me see what you sent me here. Oh, hey, thanks, Talia, very much. Okay, right. POB. Maths, sorry, maths is only 80. Okay, I don't think you do maths with me, do you? No? Okay. POA. Oh, it's only, that's the same day as Nyla, only 24th. All right, cool. All right, so we have a couple of weeks. We could get some stuff done between now and then. All right. Okay, yeah, we'll deal with that then. Yeah. All right, guys. So let's take a little refresh here, right? So as we know, we have 2 classifications for assets and for liabilities. We have current and non-current. We said current assets are those assets that are used up or converted into cash within what? 1 year or less. And non-current assets are any assets that are not current, long story short. All right. So non-current assets, right? So non-current assets are those that are expected, right, to be of benefit, use for longer than 1 year. Long story short, right? So of course, some examples, right? So Marcus, give me an example of a non-current asset. Okay, so furniture. All right, so furniture. They also said light, so that's like fixtures and fittings, right? So because those things are light and fixtures and like doors are fittings and that kind of stuff, right? All right, Paige, give me an example of a non-current asset, please. Equipment. All right, Nyla, give me one more one there. Machinery. All right, cool. All right, Jazir, give me a next one. Example of a non-current asset. Give me an example of a non-current asset, please. Jam? Land. Okay, land, right. I didn't quite hear what you said. Sorry, right. All right. Anissa, your turn. An example of a non-current asset. Yeah. Where is driving to get here? A vehicle, right? There you go. All right. And Kelsey. Oh, you said vehicle, right? So Anissa, I said we done Anissa, come on. All right. You might make a good point, on land, building, buildings, property, you could have long-term investments or non-current investments. I agree on that. That's correct. Yeah. All right. Okay. We will give Anissa a little blind for that. We could have buildings, etc. All right. Cool. All right. So Google Meet. I can't take examples from everybody all the time. So next time I'll come to you. All right. What? Your mobile. I don't have time for you right now. Huh? All right. Cool. Right. Now, so here's the thing. Right. So we have these assets that we use most times on a daily basis, right? They last for longer than 1 year and provide benefit for longer than 1 year, which means that in some way, shape, or form, they contribute to making revenue. Now, again, why do people start a business? To make a profit. The simple formula for profit is revenues earned minus expenses earned, right? So if when we use an asset, like for example, let's say like you're all using the furniture now, and people for years before have used these desks and these tables, right? This desk I'm on here, I've had since 2005, right? And it's provided me benefit probably since then, right? Somebody, hold on, which this screen here has been up since 2012, no, maybe 2015, yeah. Anyhow, so some things have been here for some time, a decade and things like that. Print is 11 years old, kind of matters, right? And it's still working. Not that well. But anyway, long story short, sorry, I got sidetracked. When things provide us with benefits or bring revenue to us, we have to match your revenue with an expense, right? And if you pay for like I said, that printer across that I bought in 2014, right? If it's still being used and bringing me benefit and helping me generate revenue, right? But I paid for it back in 2014, right? How do I match what I paid for the printer with the revenues earning me? How do I do that? After cost price over selling price. Well, that's a particular issue. All right. So basically, what I'm trying to say is, if I spend $5,000 on that printer, right, and I said, okay, it's going to last me 10 years. What I'm saying is that I'm expecting the printer to bring me benefit for 10 years. So what happens is I can't just put the $5,000 for the printer as an expense in the income statement in 2014, because then in 2016, 17, 18, all the way to 2024, I will have revenue generated from the printer, but I have no expense to match with it. So I literally have to spread the cost of the asset over its useful life. So if I bought the printer for $5,000 and it's going to be of use for 10 years, I can say, okay, let me just take 5,000 and divide by 10. What will that give me? 500. Right. So I'm basically saying, okay, I'm going to spread the cost of this asset over 10 years evenly, right? That's called the straight line method, right? Now, in the next question, when you use an asset, does it stay the same or does it slightly run down? It slightly runs down, right? So that's what we call wear and tear. When you wear new shoes, right, and every time you walk, a little bit of a layer on the bottom of the sole kind of scrapes off, right? When you use your phone, every time you use it, it has a limited life. Things could last. I mean, my phone I've had since 2018, but of course, it's giving me signs now of wear and tear. Things probably not working as well. So as time passes, things kind of break down. They lose value. They become less capable, right? That is basically what depreciation is. It's a loss in value of a non-current asset over time, all right? So that's what I'm going to put here, right? So as time goes by and the assets are used, they lose value, right? Primarily due to wear and tear. Right. This loss in value is known as depreciation and is charged as an expense to the income statement. Press the wrong button. Okay, all right. Marcus, you with me so far? It making sense? All right, Nyla, Paige, Anissa, Jaziri, Kelsey, we all with me so far with that? All right, Google Meet. I know we still in. We had calculated some stuff, but I want to kind of go a bit more into it so we have the definitions and stuff. right? Yeah, Google Meet. If you guys are good with the logic so far, just give me a quick Gene chat, right? If you need, I have some more explanation to do, so maybe if something isn't clear, it might clear up a little bit more. But if there was something I said that didn't make sense or whatever the case is, let me know. I'll see if I could repeat or re-explain. Right, missing one person. Where Jordan? Right. Okay, there you go. Right. 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 Depreciation. Right. So the revenue earned, right, from using the non-current asset is matched against the depreciation charge. Thus, obeying the matching principle. Right? Right. Now, there are two main methods of depreciation, of calculating depreciation that you must know for CSEC, right? The straight line method and the reducing balance method. Okay, cool. Okay, do I want to give more notes here, or maybe I'll just actually I'll stop this piece here. All right, PoA F5. Right, so that's the other piece of notes. Right. Okay, so basically what we have to do is in the balance sheet, we have to present, all right, that's what I want to put. Okay, all right. In the balance sheet, we need to present the following in respect of non-current assets. Right? The cost, historical cost, right, of each asset, the accumulated depreciation on each asset, and the net book value on each asset. Right? Right, so NBV is equal to cost minus the accumulated depreciation. Cool. Right, sorry, Mika, where will these notes be available? So Mika usually is just my class benefit from these notes. So what you can do, you can email me, chris@adaptuition.com. I'll see how I can help you out, right? Okay, cool. Right, so what I'm going to do, I'm going to go through an example where we have just two assets. One has the reducing balance, one has the straight line. And after the example, you're going to go through a couple on your own, and then we're going to try to put that together with the current assets and current liability section, right? All right, child of God, good afternoon. How are you going? Good to see you on. All right, sorry. Let's get some water going. All right. So let me just scroll down a little bit here. All right. Let's take out some of this stuff here. Right. Okay. All right. So example one, I guess you could say. Example, non-current assets and depreciation. The right, balance sheet. Right. Okay. So okay. Hold on. I need to just fix something here real quick. Oh, okay, cool. All right, so see, whoa, okay, that was even worse. Right, sorry, give me a sec. I kind of lost my bearings there for a second. Right, okay, so the man owned two non-current assets. Let's go with plant and machine. Okay, no, I want that one with one, right? So buildings, property, let's say machinery. So machinery, all right. All right, so machinery. So sometimes you might see machinery at cost, right? Whoa. Yeah, okay, fine. For what, right? So let's say we had 100,000 on that, and let's say we also had vehicles, right? Vehicles at cost, and let's say that value is 80,000. Okay. Right. So what we want to do is we want to do an example where we have an existing depreciation, right? So the existing depreciation on the assets as well, right? So we have so accumulated depreciation machinery. So let's say, hold on, 30,000 accumulated depreciation vehicles. Wow. Okay. So hold on. Right. And B dot, right? Machinery is depreciated using the straight line method. Right. And vehicles depreciated using the reducing balance method. Okay. Right. So we are to prepare the balance sheet extract showing the non-current assets asset section, assuming that the current year's depreciation charges have not yet been calculated. Okay, cool. So let's just recap the information before we dive into it, right? So we have two non-current assets, machinery at cost and vehicles, right? Well, machinery and vehicles, right? The machinery costs 100,000, vehicles cost 80,000. We have some existing depreciation on the vehicles and machinery, right? 30,000 for machinery and vehicles is 40,000. Right, sorry, I forgot. So should I method? 10% per annum. At 25% per annum, right? Sorry, give me 1 sec. I need to just make some room for that. Okay, cool. Right, so what they want us to do is they want us to prepare a balance sheet extract using the above information, right? Okay, so first thing we should probably do is calculate the depreciation charge for the year, all right? So using the straight line method, right? So for the straight line method, whatever the percentage is that they give you, all you have to do is multiply that by the cost, all right? So I split my screen here. Okay, I know what I want to do. Give me 1 sec, right? All right, cool. So for the calculation of depreciation machinery, okay, so all we have to do is take the cost, which is 100,000, and we are going to multiply that by the depreciation rate, which is 10%. Right, and that's it. So that's the depreciation expense. The machinery, all right? So under the straight line method, all you have to do is multiply the cost by the rate, right? The depreciation rate. For the, whatchamacallit? With the reducing balance method, all right? So, sorry, I took out the wrong thing there, right? So calculation of the depreciation of vehicles. Right, so for the reducing balance, so hold on. I'll put RBM here for reducing balance method, and I'll put SLM here for straight line method. So the difference here is instead of multiplying the cost by the rate, right, what we have to do is multiply the net book value by the rate. All right, now how do we find net book value? So we have to do cost, so net book value. So net book value is equal to cost minus the existing accumulated depreciation, all right? So on the vehicles, you have 80,000 in cost and an existing 40,000 in depreciation. So when you subtract that, you're going to get 40,000 itself, right? So it's just by coincidence you got the same figure as here. That doesn't normally happen. And now what we're going to do, we're going to multiply by the depreciation rate, which is 25%, and we're going to get 10,000. All right, so we happen to get the same figure for each one, right? That's not normally a thing. Is this coming on mock exam? I don't know. Gotta ask the teacher. But you need to know how to do depreciation anyway. Take it. Yeah. Well, technically we did that when we did the thing last week. Yeah. Where you put it? Well, in the current asset section. Right. You're talking about the income statement side of it. But we did that when we did income statements. But if you need to see replace, yeah. But you can go straight to YouTube and get. I have two sets of videos. One is like a full tutorial on provision from scratch, and one is specifically where any income statement goes under each scenario. Yeah. Yes. By year. Yeah, because the question is impossible. Yeah. I tried it several times. The journal entries I could figure out. The balance sheet never balances, right? I gave it to my teacher to do. He said, about 3 days after, which I find strange, he messaged me like, Chris, how are you doing this question? I realized an hour gone. I like something wrong. Because it's a CSEC question, right? Yeah. And they say, no CSEC question taking me an hour to do. And especially if it's an exam question, it's supposed to take half an hour for a student to do. It will take us 15, 20 minutes, right? So he did a solution where things balance. And when he explained to me how to make it balance, I'm like, yeah, first of all, I wouldn't think of it, much less Ole. Not to say Ole stupid, I'm saying that, right? But I'm saying that the elaborate things he had to do for it to make sense, something clearly went wrong in the question design stage, and either the person who designed it and the person who was cross-checking, if that person even exists, were on the same exact wavelength and knew exactly what they wanted to do, and nobody else did. Right? I mean, it was scrapped from the exam. Right. Yeah. So but here the funny part, right? Somebody else in my comment section on YouTube was like, why don't you just put them in order and then upload this instead of having doing them random? I'm like, if you go on my page, all of them in playlists. None of them random. I'm like,
I haven't checked them so long. I've been checking
hey, Kelly.
I'm focusing on math right now.
Oh, well, that makes sense.
You want math? You want to send me?
Yeah. Yes, sir.
Highlight over.
All right, good. Yeah, Kelly is a balance sheet, so it could be there. Right. So sorry, let me take out. Oh, sorry, back to here. Yeah. Right, guys. So what I want to do is I want to go through how to put this stuff in the, what do you call it? The balance sheet, right? So I'm on 190. Okay, I could do one. Yeah, 170 is fine. Put on that side, put on this side here. We'll scroll down. We'll zoom in about here. Right. I'll zoom in again. Okay, cool. So this is the D.man. Right, we'll put statement of financial position as at 31 December 20XX, right? I didn't give a year, right? But we could do that, right? Okay, so right. So you head up non-current assets. Right. Now you're supposed to have 3 columns here. First one is cost. The second one's supposed to say accumulated depreciation, right? I can't make that fit here, and I don't like things spilling over to our next section and that kind of stuff. So I'm just going to put DEPRN, right? Or DEPR. And then in this thing here, I'm going to put NBV, right? So that's net book value. Sorry. Right. Okay, cool. Need to, hold on. Okay, let's go back to 40. I'll leave it at after, right? Right. So cost. Right, accumulated depreciation. So right, so cost, depreciation, and net book value, right? So yeah, you're minusing, right? So you have 2 non-current assets. You have the machinery. And you have, oh, sorry, I forgot the Y machinery for some odd reason. And you have the vehicles, right? So the cost for the machinery is $100,000. The cost for the vehicles is $80,000. Right. What goes in this column here now? Right. So before we calculated the depreciation for the current year on either of the assets, we had these balances here. These balances represent the depreciation charges that have accumulated or built up in the previous years of the asset's life. Right? So what that means is that in year 1, year 2, year 3, for how many ever years prior to now that we've had the asset, these have been the depreciation charges in those years. And the depreciation accumulates or builds up as time goes by. Okay. So these were the depreciation charges or the accumulated charges prior to the current year's charge, and these are the current year's charges down here. So what we have to do is add the current year's charges to the previous year's accumulations. All right. So for, why will you remember? No, hold on. It only ends there because of how Carnival fell. If Carnival was earlier, things would have ended earlier. That's just how it rolled this year. And apparently for some of this year, we only have 7 weeks. Because Christmas had 4. Yeah, not 4. Only are like 12. Right. So you're going to take this balance here as the balance brought forward, and you're going to add the current year's charge of 10,000, right? So 30 plus 10 is what? 40, right? And then for the vehicles, right, same thing. You're going to take the previous charges for depreciation, the previous accumulations, and add the current year's charge of 10. Right? So that's equal to 40% is 50. Right? And then you simply subtract going across. So 100 minus 40 is 60. 80 minus 50 is 30. And now what you do is you add going down. 100 plus 80 is 180. 40 plus 50 is 90. And this figure here is, yes, 60 plus 30 is 90, or 180 minus 90 is 90. So this figure here gets a cross check. You can add either horizontally or add vertically and get that same figure there. Right? Now these two are usually blocked off, and that one is not usually blocked off, right? Oh, sorry, wait, hold on. I want to, so what I'm going to send a couple of pictures in the chat, right? So the first picture is just like of the information. Right, and the second picture is of the calculations and the balance sheet extract. All right, so let me send that. Yeah, again, I'm not a big fan of the way the figures turned out, as in like some figures ended up being the same, because that could cause confusion. People could think that that's going to happen every time, and it's not. Right? It just so happened that those figures happen to be the same this round. Okay, all right. Okay, in class, people, are we okay with the example on the screen? Any questions, anybody, anything? Marcus, you okay with that? Yeah? All right, and the circular series. Yeah? Okay, Google Meet, I didn't forget you all. If you guys are good with that, just kind of give me a G in the chat. If you need me to sorry, question? Yeah. If you need me to re-explain, give me an R. All right, cool. All right, so to that end, what I want to do is I want to give you guys some stuff to try. Okay, so this question I'll print out for you guys, but I'll also leave it on the screen, right? Because we won't need all the information for what we're going to do right now. So for right now, for the next like 20, 30 minutes, we're going to focus specifically on doing the non-current asset sections for each question, right? What I could also suggest is do each of these on a separate page. So when we come to finish the balance sheet by adding in the current asset and the other sections, you'll have space, all right? 1, 2, 3, 4, 5, 6. Okay, give me 1 sec. Page 4, all right, page range. Takes longer than usual. Anyhow, I think I know why. It's time to upgrade the machines. I don't even want this printer. Boss, what's your story? Okay. Right, so for those who are wondering which year this is, right, this is the Jan 2020. So this is actually the only paper 2 for PoA that was sat that year, because of course in May 2020, there were no paper 2s because of COVID. This question doesn't have any extra depreciation. We'll work with that. Right. Okay. Okay, so this is W. Watson. All right. So we focus in here on the shop fittings and the van. Okay, sorry. Yeah, so shop fittings and van. All right. So we have the value of 6,000 and 4,000, and then it says depreciation is to be provided using the straight line method as follows. So both of these assets are being depreciated using the straight line method. Give me one second. Let me actually give my stuff. So the first thing I want you to do is simply to calculate the depreciation charge for the current year by multiplying the rates by the cost, right? Now, again, there's no depreciation accumulated or brought forward on these assets. So you don't have to worry about it. And even if there was, it wouldn't be relevant because under the straight line method, we don't factor into the depreciation calculation any previous depreciation, only for the reducing balance method. All right. So, right, we're starting off easy. We're starting off with one that just uses the straight line. So you're focusing again on the shop fittings and the van cost. Right. So let's find those percentages. Let's put them. Assets, and I'm going to do a non-current assets section for the balance sheet and put in the information like the example. Good afternoon, folks on TikTok. Thanks for joining. Ran a bit late today, doing some depreciation. Hey, Julie, you exam tomorrow. Wow, no, wait, you're just after carnival. Conflicts, GD. How you doing? Jadine, how you doing? Good afternoon. Yes, yeah. We started back with some basic revision, but we were gonna crank things up as the weeks go by. Next week we'll be finishing off balance sheets, and after that, fit in some bank recs, some partnerships, that kind of stuff. Yeah, so again, we're just focusing on the non-current asset section. W. Watson. Yo. Whatever stock is, but both of those, once it's inventory that we're selling, is current asset. The one that goes in the balance sheet is the one that exists at the balance sheet date. In this question, the balance sheet is being drawn up for 31st December 2019, right? So the closing inventory is the one that goes in the balance sheet. That's correct. 13 viewers on YouTube. What? YouTube on fire today, boy. Cool. All right. So, folks, let's start talking about some stuff. So, we're going to head up non-current assets. Hold on. W. Watson statement of financial position as at 31 December 2019. Right? If it didn't know the date, it's not a problem. We'll allow that for now. Allow it. Right. So non-current assets. Cost, depreciation. Sorry, 1 second. And net book value. Okay. Right. So again, we have two non-current assets. We have shop fittings and we have van. Right. The cost of each is 6,000 and 4,000 respectively. Right. So I start you off there. So I'm going to give a minute again for anybody who needs. But all we're really doing is finding the percentages of the cost and plugging them here. Right. So it's kind of, like I said, it's a scaled down or easier version of the example we just did. Because in that example, we actually had pre-existing depreciation, which had to factor into the calculation sometimes of the current year's charge. But that wouldn't have happened here because both assets are being depreciated via the straight line method. But then for the balance sheet, you would have had to have added the current year's charge to the previous year's accumulations brought forward. Yes, these are adjustments. Right, we're focusing on depreciation today. We did. We might probably do a couple of stuff with the current assets and current liabilities too. Right. But I wanted to just kind of focus on depreciation for a little bit and then go on to the other things because sometimes when you do too many things at the same time or at once, it kind of gets lost in a clutter, which is what I don't want to happen. Right. Right. So 10% for the shop fittings. Right, and then for the van, 20%, right? So 10% of 6,000 is 600, 20% of 4,000 is 800, and you are simply subtracting going across. 6,000 minus 600 is 5,004, 4,000 minus 8 is 3,002. Right, we add those two, and then we add going down here as well. That's going to give us 86. Yeah, and if you subtract it going across here, you'd also get 86. Right, so once again, this figure of 86, you have a cross check. Right, so again, you could add your columns going down. Right, 5,004 and 3,002 is 86. And you could also subtract going across. And 10,000 minus 1,004 is 8,600. Okay. All right, in class, people, are we okay with the non-current asset section for W Watson as it stands on the screen there? Yeah? All right, cool. Sana, that's correct. Very good, Sana. Okay, cool. All right, Google Meet. So, my people, so Ayaz, Jordan, Cassie, Mandeep, Matthias, Talia, Nuri, if you guys are good with that, just kindly give me a quick Genie chat. If you need me to re-explain anything, give me an R. Cool. Okay, lovely. Okay, good. All right. Okay, so like I said, leave some room under that so to try and finish off the asset section a bit later on, right? So next question. Oh, not this one. Sorry, 1 sec. Go like this one. Ah. Okay, cool. 12. Okay, cool. 1 second, guys. All right. So Google Meet, I'm gonna send a couple of pics in the chat. Yo. Bank is the only thing after bank is cash. So bank goes second to last basically. There's no like cash item specifically. Bank usually is the last item. Okay, so what I'm gonna do, guys, is just like before, I'm gonna zoom in a little bit more. Right. And I'm gonna show just the relevant bits. Well, I'm gonna try to show only what's relevant, but I'm not sure that might happen as I would like it. Right, okay. So in this one, the motor vehicles and the land and building. So hold on, give me one second. Let me see if I could actually I have an idea. Look at Blanco, that stuff. Right. Right, so motor vehicles and land and buildings. And yeah, actually I will copy and paste that as well. Right. So yeah, so some of the excess and irrelevant stuff has been blanked on there, right? Okay. So your motor vehicles, hold on, wait, where the land? Sorry. I need land. I need that for sure. Right, land, okay. Right. Okay, yeah, so motor vehicles cost 80,000, land and buildings cost 200,000, and your accumulated depreciation for each, right, is 22 and 54 respectively, right? Now it says depreciation on motor vehicle was omitted for the year. Motor vehicle is depreciated at the rate of 20% per year using the straight line method, right? So for the motor vehicle, it's 20% using straight line. So to find that depreciation, all you have to do is multiply the 80 by 20%, all right? Now, they don't give us any information as to how to depreciate land and buildings, but the thing is, in this question, that depreciation was already done for us. Right? So yeah, so this 54 actually includes the depreciation charge for the current year. So you have to read your question carefully to know what you have to do. Right? So like in this particular case here, adjustments were already made because this question was really purely a balance sheet question. Right? It wasn't like a do an income statement before, etc., etc., right? They had some stuff here I would factor into that balance sheet as well. All right, so here what I want you to do. I want you to calculate the depreciation on the motor vehicles, which is just 20% of 80,000. You're going to add that to your 22, and then you're going to draw up your non-current assets section of the balance sheet using the information given to us and that we've calculated, right? So the cost for land and building is 200, and the depreciation is 54. So again, whatever depreciation was for the year, was for the year for land and building has already been calculated and factored in. William Cameral. Right, sure. Hi. Is this asset equal to equity plus Govina? Yeah, Govina. 16,000. Sana, that's correct. Very good. Good job. Just letting YouTube know there's always a bit of a delay between when I actually say things and when you all hear it. All right. So if you ever ask me something and don't reply right away, please don't feel how. Because I usually don't have the screen up. I'm just checking because I see you all there checking me out today. It was 16 hours down to 9. But I mean, that's fine. It could be two people. I'll still talk to you. All right. So just so you know, if you find 20% of 80,000, you get 16. So what I want you guys to do is draw up the non-current asset section for me for this question. Please and thanks. I just have to make a quick call for my mom to order something for her. Should not take me very long. What I'm doing is I'm just doing non-current section. All right, so that's the get up to non-current assets with current assets and current liabilities. All right, guys. So what I'm gonna do is I'm gonna pull up my little thing here. All right. Okay, cool. Oh, this is by the way. I don't think I mentioned this was the Jan 2015 question. Sorry about that. I was supposed to let you know that before. Sorry about that. Jan 2015. Okay. And the name of this question is Ava Telesford. All right, cool. Jan 2015. Ava Telesford balance sheet. Right. Ava Telesford. Right. And this is 30th April 2014. Right. So this is simply a financial year that doesn't correspond to the calendar year. Right. So we're going to take out those things there. Right. So we have land and buildings and then motor vehicle. Right. 200 to 3 and 80 to 3. Right. So the depreciation on the land and buildings, like we said, is 54. And the question said only the depreciation on the motor vehicle was omitted. So that one we had to calculate, which means, therefore, the depreciation on the land and buildings was already calculated and catered for inside of this 54. All right. So again, I'm showing you guys, I know we did one particular thing in the example, but I'm choosing questions based on, well, yes, based on relevance to what we did and to kind of show you, hey, things don't always come straightforward and exactly like the example, right? So you have to, like I said, read carefully and understand what they're telling you and know how to operate. So even if you didn't realize what I was saying, even though I did talk about it before, it's quite understandable if it slipped your mind. Yeah. And then, and here now, right, we'd have to find 20% of the 80, right? That's 16 and add it to the 22. That will give us 38. Right. Right. So yeah. So this is what the non-current assets section for Ava Telesford should look like. Okay, cool. Boom, boom, boom. Right. Okay. So Google Meet, if you guys are good with the solution as presented, just kindly give me a G in the chat. If you need me to re-explain, I guess with any errors, give me an R. If you need to recalculate anything, give me an R as well. Okay. Sorry. I was supposed to. Right. No, I'll send that. Okay. Cool. Yeah. Right. Right. Google Meet. We okay with that? If not, let me know. Let me know what you want to re-explain. Right. So I got some people giving me a G there, and some people did not. Right. Okay. Okay. Right. So let's go back on top of it. Okay. Sorry. In class, people, are we okay with the non-current asset section as it stands there? Are we okay with the depreciation and everything? Marcus, talk to me. Good. All right. Jaziri, Kelsey, you okay there? All right. And if it was nodding, so I know she okay. So fixtures and fittings. Sorry, we had that too. Good. Good pickup, Mandeep. All right. So check this. This question also had another non-current asset. Kind of, I don't want to say hidden, but not anywhere near the others, right? And also there was no depreciation on it, which makes it a kind of odd item out, right? So yeah, so good pickup there, Mandeep. Thanks for doing it. Right. So, right, it goes to show you really need to read the question carefully. So what I will do is I'm just going to put it in, right? Fixtures and fittings. Right. Yeah. Okay. So this is 24,200. No information was given in the question as to the depreciation on the fixtures and fittings, right? Because if you look at it, right, this is not a trial balance by any means, eh? This is not a trial balance. This is just a list of balances for assets, liabilities, and capital. I feel I should have given you a trial balance, right? Let me just take off the extra stuff I have being blocked off here, right? Okay, yeah. So as you can see, we have motor vehicles first and then land and buildings. And then the only information regarding depreciation was on the motor vehicle and not the land and buildings, right? But they had depreciation here for motor vehicle and land and buildings, but not for fixtures and fittings. So we didn't go looking for it, right? But it always goes to show, it goes to show always read your question carefully, because they could put things in odd places and have them kind of inconsistent. And well, you had to sort it out, yeah? All right, okay. So, sorry. So let me resend the picture in the chat. And again, thanks, Mandy. I was good looking out on that one. A little bit more? Okay, cool. Yeah. I think that had kind of raised my eyebrows too when I first tried the question. Like, why don't they have any depreciation on the fixtures and fittings? Because it is a non-current asset. We don't have any other contextual clues that indicate that it was not. Hey, Ali, what's going on? Right. Right. So do we add 22 to it, or do we just put 16? No, yeah. Add the 22 to it, right? Because the 22 was the previous year's depreciation charge, and the 16 was the current year's depreciation charge. And what you have to put into the balance sheet is the total, right? That is Sana. Yes, Anna. So I hope that answers the question. Govina. That's correct. Right. All right. So with that said now, what we're going to do is, give me one sec. Okay. Full train. Right. This is the one I think I wanted to actually do today. Yeah, you really had to go back to all the way there. Wow. Activity, what are you talking about? Yeah, that. Okay, so here's what we're gonna do, right? We are going to start putting in the the current assets and that kind of stuff, right? Okay, so let me zoom out here a little bit. And seeing as we're on Ava Telesford right now, let's do the current assets section for Ava Telesford. So what we're gonna do, we're gonna zoom in a little bit more because I find it's a little small. Right, so for Ava Telesford, what items here would be current assets? Cash in hand, accounts receivable, right? What about loans? Is loans a current asset? Loan as a liability, right? Provision for bad debts. Well, that isn't a current asset, but we use it to adjust what current asset? We use it to adjust debtors or receivables, right? We subtract that from the receivables figure, right? So we dealt with the depreciation. Inventory on hand. Is inventory a current asset? Yes, it is. Accounts payable. That's actually a current liability, right? What about bank overdraft? That too is a current liability. Fixtures and fittings, well, we dealt with that in the non-current asset section. Accrued expenses, also a current liability. Prepaid rent, current asset, that's a prepaid expense. And well, capital is just capital, right? Now, with that in mind, let's take a look at the, additional information. Okay, so let's see if any of these apply to either current assets or current liabilities. Now, I think I want to do a little split screen thing here so we could refer to some of the items here, right? Okay, the first item says included in the loan of 68,000 is an amount of 8,000 which is payable within a year. Aha! Right, so the loan, how do we normally classify loan? As a non-current liability unless otherwise stated, right? But every year, usually, a piece of that loan has to be repaid, not so? Anything that has to be repaid within 1 year or less is a current liability. So also, what they're telling you here, right, in this item here, included in the 68, right, included in this 68 here, right? Sorry, one sec. Okay, I'm just calling. Hi, good afternoon. Yeah. No problem. Okay, I'll come in. All right, thank you. Okay, sorry, let me just pop outside to this parent real quick. But yeah, included in that 68 is that 8,000 as current. Okay, sorry about that. Right, so like I was saying, in this 68, there's an 8,000 portion which is payable in the current year. So it means that we have an $8,000 current liability and we have to take it out of the 68. And when you take 8 out of the 68, how much you have left? 60. And that is the non-current portion, right? But we're not worrying about non-current just yet. All right, now, so this second item we dealt with already, that was the depreciation stuff. Net income, or profits was this much, right? So we're gonna have to adjust that. We'll come to that later. I don't think we do that piece today. And Ava made drawings of 1,000 per month for the past year and an additional 800 in goods in our inventory. Right. So that that is gonna come into play when we do the capital section. Okay. I don't know we'll get to that piece today, but because I want to focus, like I said, specifically on the non-current assets, which we did with the depreciation, and then current assets and current liabilities. So right. So in all of this here, nothing really affected current assets. All right. So what I want you to do is I want you to head up current assets. All right. So current assets. And I want you to put in the current assets, right? And put them in the middle column. Right now, I think for the receivables, remember, you're going to have what you call it? The provision for bad debts you have to subtract. All right. So if you want a little thing, right, it could look like this, right? So inventory, right? I don't think we have any supplies here. And your receivables minus your provision for bad debts is your net receivables. All right. And then your prepaid expenses, you had I think we had cash in hand. Because I think there was a bank overdraft, right? Sorry, I didn't see the question. I'm Kemal. Is there a question? Is there a question? Right, so we have inventory 42, right? We have receivables 25. From that, you have to minus the 2,500. You have prepaid rent and you have your cash in hand. So those are your current assets. The gift and take it back. That's what happened before. Okay, well, we're good. Right, so the full year or quarter. No, right. So it's for the full year, right? So like I was saying, right, as at that date, right? So just because it's on April 30th doesn't mean it's a quarter of the year. In any case, that would have been a third of the year, right? So the 30th of April is simply their year-end date. So not every year-end, not every financial year-end is December 31st, all right? If it was that it was for like a quarter of a year, then they would have told you, hey, this is the first quarter, right? So see, nothing on top of there about it being for piece of the year, nothing. I see for the year up to that was 30th April, all right? So yeah, so it's at the end of a year. So even though it's not December 31st, it's their financial year end. Cool. Right, yeah, and we had no what you call it, adjustments to make the current assets, right? So I'll give you a minute or two again, and then I'll put up the solution. Fiscal year. Yeah, fiscal year is another way you could say it. Also, reporting period, financial period. Right. It was okay. All you have to do is just multiply the depreciation charge by 1/4 or divided by 4. Right. So, like just now we calculated it was what 16 or it was 16. Right. So if it was only applicable for a quarter of the year, we'd multiply that by a quarter. Well, 3 out of 12, right? 3 months out of the full 12 for the year, and then or divide by 4. Extreme plus plan. 450 VAT inclusive. Sorry. How you doing? All right. So let's push that up. Let's pull this back. Right. So like we were saying, we had a couple of current assets here. So we have sorry, one sec. Here. Right. So we're gonna start with the inventory. Right, which is 42,000. And we have the accounts receivable, which is 25,000, less the provision bad debts, 2,500, right? So that gives us, whoa, sorry, my bad. Right, so we call that, you can call that net receivables. Right, and we have the prepaid expensive rent. That was down here, right? The first 4,000. And we have cash in hand. That's the 6,100, right? Cool. Right, if anybody's seeing any other current assets that I'm not seeing or I have omitted, let me know. Right, I don't think there are. Right, no, right. Cool. Right, and then to total it up. Right. Okay. In class, people, are we okay with the current asset section here for Ava Telesford? Any questions, anybody, anything? All right. Google Meet. If you guys are good with that, just kind of give me a quick G in the chat, please, sometimes. All right. If you need me to re-explain any particular part, that's fine. So can we go through both ways of the balance sheet? Rovina has done more than 2 ways, huh? I actually started the balance sheet review since 2 weeks ago. So you could actually check my YouTube, check the same channel, go to the lives, and you can check out the LC balance. You'll see it headed up. It was from early February or mid-February till now. So yeah, you'll see some other stuff there. We built it up from scratch. Right, so Mandeep, Jordan, Yuri, Ayaz. Okay, cool. Right, so what about Cassie, Talia? You know what's going on now? Please understand. Right, okay. Okay, so I think we have just enough time to get the current liability section done. So let me maximize here again, and let's just discuss the current liability. Right, so the loans. So again, loans normally refers to non-current liabilities, but we know that there's an 8,000 portion of that is actually current, right? And then the other the other current liabilities. Let's pull that down here. Right. So you have what? Accounts payable, bank overdraft, accrued expenses, and it's 8,000, right? So what I want you to do is I want you to basically do the current liability section. Yeah, so do the current liabilities, right? So I want you to put them in this column here. Bring the subtotal across here and subtract it from this to give you your working capital, your net working capital. So when again you said you'll post this year paper one? As in 2025 Jan? That I don't know. I don't rush to do paper ones, because the paper ones are all a bunch of repeats. You barely have anything. May 2024 was the only exception so far. I haven't even looked at Jan 2025. I don't rush to paper ones. Paper ones are very repetitive. And honestly, nothing to get worked up for. Right? But I'll see if I can get to that sooner rather than later. I was focusing on, I have recorded all of my solutions, the video recordings for the 2024 papers, Jan and May. I just have no time to edit it. So a little bummed about that, but I'll see what I can do. haven't even tackled the Jan 2025 paper 2 yet. But maybe I'll do a live, or I'll do like 5 lives, one for each question, and then just do them. But I have an idea about what I want to do for the Jan 2025. I've been wanting to create content for TikTok and Reels and YouTube Shorts and that kind of stuff, vertical content. So I'll see if I can carve out a day and get that stuff done. And if I could find an editor on the cheap who could do good work, that's the trouble. Cheap and good don't go in the same sentence. Yeah. I think I'm manager. Okay. Sorry, one sec. Hello, good afternoon. Yeah, okay. You know where you're coming to? Oh, okay. But it's not very nice to come in, huh? Okay, cool. Yeah, guys, I just have to collect some pizza from my mom outside. When I collect it, I'll just carry it upstairs and come back and just fill in the stuff, and then we will call it a day. Right, but next week we pick them back up on Monday, knock out some more balance sheets, and then probably partnerships on the Wednesday, bank recs the following Monday, error correction the Wednesday, companies the following week, for sure.
Awesome. Oh, yeah. It's tricky. What's she doing?
Hey guys, okay, sorry about that. Thanks for your patience. Okay, so let's look at some stuff here and get going, right? So we have accounts payable. Now, people do occasionally ask about a particular sequence in which you have to list current liabilities. As far as we know, there is none, right? Even if it has to do with order of permanence or liquidity, we have not seen like an official thing from any reputable or trustworthy source. So whatever order you put it in should be fine. Okay. Right, bank overdraft, accrued expenses, 50, and then the current portion of non-current loan. Right? I know it's hey Khalees, how you doing? Good to see you. Right. That's the 8,000. Right, so we add all that up, get 49,350, pull that across there. So let me maximize here so we could see everything. Right? Everything cool, boy, Khalees. Cool for the hour. Just tension ramping up as we get closer to the exams, boy. So plenty work to cover. Right, so that figure there, that is your net working capital. Right, and you're going to add that to your 212 above there, 212, 200, sorry. Right, so there's no real label for this. You can call it total assets less current liabilities, but there's no real need to put anything. So I'm just going to actually tack on something here, right? Now, the next thing to put here is the non-current liabilities. Sorry, 1 second. Right, now that item was a 68,000, right? So that was the loan, 68, but we had an 8,000 portion that was current. So the figure that would go here for loan would be the 68,000 less the 8,000. And that's 60. All right, and that figure there is your net assets. All right, so that's basically the top half of the balance sheet. So all we're missing now is the capital section, and that's what we'll do on Monday. You soon as well. Well, good luck, man. All right. Right, so we did the current asset section, current liabilities, subtotal minus from that, giving us net working capital. You add that to your non-current asset total, giving us 237,450, and you subtract your, well, current liability balance, giving us the net assets, right? And of course, that is financed by capital. Okay, Google Meet, I know we are at 6, right? But if you guys are good, please give me a G in the chat. If you need me to re-explain anything, I don't mind, right? I'll re-explain. I'm not rushing you, all right? But you have to let me know if there's something that you didn't really vibe with you or resonate. All right, in class, people, are we okay with what's present on the screen there? Specifically the current liabilities and net working capital and these things. You okay with that? All right, cool. All right, so folks, just remember, as of today, right? I think we're about 8 or 9 weeks out from the exam. Let me see, the exam is a Tuesday, right? So there we go, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, we are 9 weeks out from the exam. Less 1 day. No, we have to. We have to face it, right? So we have things to do. Now, of course, you all have mock imminent. So we have things to do with that as well, right? So the revision is going to continue from now right up until. Now, just so you know, during the Easter break, we're going to keep the days and times the same. We might tack on an extra day to kind of cater for the Good Friday or Easter Monday being a public holiday. And of course, as you know, once you go back out to school on the 28th, it's just that week and exams are the next week, right? So during that week, maybe what we could do, or maybe we could pile up on the weekend, right? So we'll decide what you all want to do near to that time, right? But we'll cover the work. Anyhow, folks, that's about it for today. If, of course, anybody has any questions and they get to ask during class, please feel free to message me. Other than that, have a good evening, have a good weekend, and I'll see you next week. Bye. All right. So right. Cash flow. Sana. We're actually doing the cash projections during the April, the Easter break. So mid-April. I actually have it already up on my channel. You could go on my channel right now where you guys are, and you could search adaptation, statement of cash projections. So do we put both the provision for dollars? Right. So those are the same thing, just by different names, Anna. There's no provision for ballots. Not, oh yeah. So they didn't call that in this question, right? Yes. So they call it something different in the question, but they mean the same thing for the purpose of CSEC PoA. Right. Well, yes, it's probably the same as we do. Yeah. Yes, provision for bad debts, provision for doubtful debts, allowance for doubtful debts, allowance for uncollectible debts. They all mean the same thing. Both can mean the same thing. No. At least I don't know of a situation where that is that way. Right? But you can check my channel. Check my channel, right? I have a video explaining provision for bad debts from scratch. I also have it specifically where you put it in the income statement, right? And I have income statement stuff with all the adjustments. Right. Kelly, yeah, no problems. And Uwe, thanks for the follow. All right. Okay, TikTok, I'm going. I'll see you all in about half an hour for maths later. And YouTube, same thing, I'm going. But I'll come back in about half an hour to do some maths. We'll get some past papers. We can Jan 2024 paper 2 questions.